What's up, guys? Today I'm going to be talking about the NEOS QQQI Income ETF. This is a high dividend ETF comprised of mainly NASDAQ 100 companies. And the way this fund is able to acquire such a high distribution rate is because of its use of selling options on the underlying assets. So there isn't a lot of NAV erosion with this strategy, as we will look into soon. And this is an ETF that's similar to JEPQ or ETFs like that. And there's another one called SPYI, same idea, but it's based on the S&P 500 rather than NASDAQ. So I'm going to look into the real returns of QQQI, and we're going to try and determine if this is the best income ETF in 2025. So we're going to hop over here to total real returns. As you can see, we have QQQI, we have JEPQ, and we have SCHD, three of the most popular dividend ETFs out there. And just below it, we have this total return chart. So as you can see, this red line is going to be QQQI, the blue one is JEPQ, and the green one is SCHD. So at least since inception, QQQI has been outperforming JEPQ and SCHD. If you compared it to the NASDAQ itself, QQQ, it might be a bit lower. We can actually hop in here and see. And if you guys are curious, this website that I'm using is called totalrealreturns.com. And let's scroll back down. And as you can see, QQQI is actually outperforming the NASDAQ itself as well, which is quite interesting to see. But yeah, so over the past, looks like roughly year and 3 months or so, QQQI has obtained a return of 11.34%. And now this isn't just stock price appreciation, this is from dividends as well. And the interesting thing about ETFs like QQQI is that the dividend yield is returned to you as a return of capital, which means it isn't really taxed, most of it. Most of the distributions are not taxed from QQQI. Now, the way it works is you will pay taxes at some point, right? But you won't end up paying the majority of your taxes on these ETFs until you sell. So obviously it's not the case with SCHD. SCHD is mainly what we would call ordinary dividend, or qualified dividend, sorry. So that's taxed at a different rate, but return on capital generally just isn't taxed. So you're not going to be getting a lot of tax with QQQI. JEPQ, on the other hand, has a slightly less favorable tax structure, but the price of JEPQ tends to be more stable, slightly less drawdown during downturns and things of that nature. So really, QQQI, in my opinion, seems to be a better option for taxable accounts, and QQQI is what I'm going to be purchasing in my taxable account rather than something like a JEPQ. Now, with that being said, SCHD I'm also a fan of, and right now it is trading quite cheap. It's getting around a 4% dividend yield, maybe slightly below, but SCHD, the thing about that one is it obtains a much higher dividend growth rate of around 10% per year. QQQI isn't going to see a lot of year-over-year growth. It is mainly suited for high annual income. So that's about it for this income ETF comparison. If you guys enjoyed, please leave a like and subscribe to the channel. And without further ado, I'll see you guys in the next one. Peace.